PBOC 3Q2021 report. What are the important observations? And what is relevant to my investment? This is an extract from PBOC 3Q2021 report. Here is the English translation of the data earlier. Note that current account surplus plus other investment is equal to 565 billion USD. Renminbi has been strengthening against USD this year, with current account surplus and capital inflows into China. So what did China use its foreign currencies on? Overseas investment, overseas securities, investment, and other investment. This PBOC's review of its balance of payments. Billing data shows year-to-date current account surplus and healthy cross-border investment. Why does this matter? China is opening up its financial markets a bit slowly, but certainly. PBOC recently also warns and urges parties to catch speculations on Renminbi. Too strong Renminbi isn't that favorable to China and US. Despite the trade war back in 2018-19, China exports were still up in 2020. Why? China is important to the world. What's the USD Renminbi equilibrium price point? USD Renminbi above 7 in 2019 and 2020. What can PBOC accept? Is it anything from 6.25 to 6.4? Growing domestic consumption has reduced reliance on others, giving China more discretion over its capital account. China highlighted that it's going to optimize its overseas assets and debt. Outbound investment into Hong Kong securities is one of the capital outflows. Will China allow more liberalized overseas investment by its citizens? A big question that all of us as investors in Chinese equities have to think through is southbound investment into Hong Kong securities have been happening, but when will overseas investment be allowed for the normal citizens of PRC? Tiger Brokers and Futu continue its way down these few days. Here on the left is the PBOC report of various major economies' inflation data. We note that rising inflation in major economies like US, Europe, UK, etc. pose risks to global economies, with consumer buying power affected by rising prices. US Federal Reserve will start tapering its asset purchase program in November 2021. Overseas risks are definitely accumulating. IMF urges China to tackle financial risk in November 2021. They highlight that it's important to avoid contractionary approach. Second, to think through their tight regulation over tech policy because it had created a lot of policy uncertainty. And third, the downside risks are accumulating and they hope that China need to address the downside risk ASAP so that they can continue to see China economy growing as per what they forecast. PBOC understand their risk, but China has their own strength as highlighted in their report. What can China do? China definitely have room to cut rates if required. If developed economies like US, UK, and other European countries raise rates to combat inflation, the PPI and CPI in these countries will likely come down in months to come. China in the process will face less inflationary pressures, giving it room to cut rates. Moving into 2022, China can potentially announce a completion of tech regulation review. And this policy clarity will give investor confidence in Chinese equities and possibly lead to more capital inflow into China. But with Renminbi strengthening further, this may not be exactly ideal for China exports. Then how? If you recall, rate cut by China to balance out the Renminbi strengthening effect may make sense right now. Another point highlighted in the PBOC report is that they would want to deepen financial market reform both ways. This means they will continue to deepen the opening of financial markets both locally and in overseas market, allowing the to and fro flow of the capital and strengthening the attractiveness of holding Renminbi assets. What will I do in face of all this news from PBOC and the general market conditions right now? Foreign bears will give up till clarity by the Chinese government. For myself, I'm positioning for longer duration bets in Chinese equities. I won't chase the price at resistance level because it's been observed for a few times that whatever price for myself, when I see that they are at resistance level, they will just be bounced back to lower levels. For myself, waiting till December 2021 for the longer duration investment may make a lot more sense. I will continue to look for fintech and metaverse hard tech businesses if I want to deploy for the longer duration investment. Like what I mentioned in previous video, Chinese tech stocks are likely to have sustained recovery until regulations on overseas investment are out and the tech clarity in terms of regulations are out. Patience is definitely required if one is interested in investing in China and Hong Kong stocks.
As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions